Welcome to today's deep dive, Tech IPO Frenzy. Tech IPOs are back in the spotlight. From AI unicorns to biotech disruptors, 2025 has become a showcase year for companies stepping into the public markets. But what's behind the hype? And more importantly, what does it mean for your portfolio? Today, we're breaking down the latest wave of tech IPOs, decoding the numbers, the narratives, and the next big moves shaping the market. Let's start with the basics. 2025 has been one of the busiest years for IPOs since the pandemic-era slowdown. We're not just talking about your household names, though yes, we've seen big players like Neural Edge AI and QuantumWorks hitting the market, but also a surge of niche players in biotech, cybersecurity, and green tech. So, what's driving this frenzy? Three things. First, liquidity is back. After years of tight monetary policy, interest rates have eased, and capital is flowing again. Second, tech valuations have stabilized after the painful reset of 2022. Investors who were burned then are now cautiously coming back, looking for new opportunities. And third, institutional investors are hungry for growth stories. Many of these companies sat out 2023 and 2024, waiting for better conditions. Now, the stage is set, and they're seizing the moment. So, a company decides to go public. How do we go from a private startup to a billion-dollar ticker symbol? It starts with valuation. Many of these IPOs are being priced not on today's profits, because many of them don't have profits yet, but on future growth potential. Price-to-sales ratios, enterprise value to revenue multiples, even custom, growth-adjusted, metrics are used. That's why some companies debut at eye-popping valuations. Next comes the roadshow. This is the persuasion stage. Management teams present their story, framing themselves as the next Google, the next Nvidia, the next Tesla. Storytelling here is just as important as the numbers. And then there are the anchor buyers. Hedge funds, pension funds, sovereign wealth funds, these large institutional investors often commit early, giving the IPO momentum and credibility. Their involvement helps stabilize the price when trading begins. Beyond the numbers, these IPOs reveal where technology is headed. Artificial intelligence remains the star of the show. Startups focused on AI hardware, AI-driven cybersecurity, and AI-powered biotech are some of the hottest listings this year. Quantum computing is finally stepping out of the lab and into the market. Companies are promising breakthroughs in materials science, logistics optimization, and drug discovery. We're also seeing biotech merging with technology, genomics companies leveraging machine learning to unlock personalized medicine and target rare diseases. But disruption works both ways. Today's hot IPO might aim to shake up an industry, but it's equally vulnerable to being overtaken by a faster rival or a pivot from a tech giant. And increasingly, ESG factors, environmental, social, and governance, are shaping investor appetite. Companies with strong sustainability narratives are being rewarded, while those out of step with global climate or governance trends are finding the road tougher. So, what does this all mean for investors? New IPOs can be both an opportunity and a risk. If you're already heavily weighted toward growth stocks, chasing every new listing can increase volatility. But selectively adding exposure to themes like AI, quantum, or green tech could give your portfolio a future-proof edge. Don't forget the lock-up period. For the first 3 to 6 months, insiders can't sell their shares. But once that restriction lifts, a wave of selling pressure often follows. Tracking these dates can reveal buying opportunities or signal corrections. When it comes to strategy, you've got two main choices. You can buy the dip, if you believe in the long-term fundamentals of a company. Or you can wait and see, allowing the hype to cool and the market to find a fairer price before you commit. Looking ahead, the IPO pipeline remains strong. Robotics firms, fintech challengers, and even space tech companies are preparing to go public in late 2025 and into 2026. But challenges loom. Regulatory scrutiny around data privacy, AI ethics, and cross-border listings is intensifying. Geopolitical tensions could complicate valuations, especially for companies with sensitive supply chains or reliance on rare earth materials. So, is this IPO surge sustainable? We're not at dot-com bubble levels yet, but valuations are stretching. If the global economy stays resilient, the pipeline will keep flowing. But if growth slows or rates climb again, we could see a sharp cooldown. To wrap it up, 2025's IPO market offers a fascinating glimpse into the future of technology. From AI breakthroughs to biotech revolutions, the opportunities are real, but so are the risks. The key is separating hype from substance, and making sure new listings complement, not destabilize, your portfolio. If you found this breakdown useful, make sure to like, subscribe, and share your thoughts in the comments. Which IPO are you most excited, or skeptical, about this year? I'd love to hear your perspective. Thanks for watching, and I'll see you in the next deep dive.